What are the IRS rules for reimbursed medical expense deductions? Imagine paying out of pocket for a medical procedure, only to get reimbursed later. Did you know that the IRS has specific rules about how that affects your tax deductions? Understanding these rules can help you keep more of your hard-earned money. When you pay for medical expenses, you can only deduct what you actually paid yourself. If your insurance or a health savings account reimburses you, that amount cannot be claimed as a deduction. For example, if you spent $1,000 on a medical bill and your insurance reimbursed you $800, you can only deduct the $200 you paid out of pocket. To claim these deductions, you need to itemize your deductions on Schedule A of your federal tax return. This means you cannot take the standard deduction if you want a benefit from medical expenses. Usually, itemizing makes sense if your total deductions, including medical costs, mortgage interest, taxes, and charitable donations, are more than the standard deduction. The IRS only allows you to deduct the part of your medical expenses that exceeds 7.5% of your adjusted gross income. So, if your total income after adjustments is $60,000, you can only deduct expenses above $4,500. If your unreimbursed medical costs are $6,000, you can deduct $1,500. The IRS considers many expenses as medical costs, including payments to doctors, dentists, hospitals, prescription drugs, and medical equipment like hearing aids or crutches. Some other expenses that qualify include certain health insurance premiums, transportation costs to medical appointments, acupuncture, addiction treatments, and weight loss programs for specific health conditions. When you receive a reimbursement, you need to subtract that amount from your total medical expenses before calculating your deduction. For example, if you paid $1,000 and got reimbursed $500, only the remaining $500 count. For Black families, especially those facing higher health care costs or limited insurance access, keeping detailed records of all medical payments and reimbursements can make a big difference. Remember, expenses paid for a spouse or dependents also qualify, as long as they meet IRS rules. If you're unsure whether itemizing is right for you, talking to a tax professional familiar with your family's needs can help you maximize your deductions. Keeping good records and understanding these rules ensures you don't miss out on potential savings. By following these guidelines, you can make your medical expenses work to your advantage when it comes to tax time.